All right, strap in, everyone. We are going deep today.
Deeper than we've ever gone before.
Maybe, maybe. I think this is going to be a fun one, though.
I'm excited.
We're talking bull traps, those sneaky tricks the market can play on you.
Oh, yeah. Those can be nasty.
We've got some really good insights here. Looks like a Q&A with some real experts.
Ooh, I like those. Straight from the horse's mouth.
Exactly. We're going to figure out how these traps work.
And more importantly, how to avoid them, right?
Absolutely. You'll be a bull trap pro by the end of this.
Challenge accepted.
Okay, so first we got to paint a picture. You're strolling through the market, feeling good, and suddenly, bam!
A bull, right?
Right, a bull charges out, horns down, ready to send prices through the roof. But
Your trick.
yeah, it could be a trap. It's like a matador luring you in.
So it's not just about the price going up, it's about the intention behind it.
Exactly. They want you to think it's a real rally.
Yeah.
So you buy in at the peak, thinking you're about to make bank, but
The rug gets pulled out from under you.
prices plummet, and you're left holding the bag.
Ouch, that's gotta hurt.
It does. So how do these traps actually get set? What are the, ingredients?
Well, our source material mentions misleading news as a major factor.
Right. Makes sense. I mean, a well-timed news story can really move the market.
But we're not just talking about, accidentally misleading information here. We're talking deliberate manipulation.
Like what? Paid articles? Fake news?
All of the above. Think about it. In this digital age, information spreads like wildfire.
Especially on social media, right?
Exactly. You see a bunch of influencers raving about a stock, and you're like, I gotta get in on this.
So how do you separate the real news from the fake news?
Always double check your sources. Go beyond the headlines. Look for evidence, data, anything concrete.
And if it sounds too good to be true?
It probably is, especially if they're using a lot of emotional language, trying to play on your FOMO.
Oh, FOMO, the fear of missing out. That's a powerful motivator.
And it's exactly what these manipulators prey on.
Our source talks a lot about rug pulls. Those seem especially common in the crypto world.
Yeah, rug pulls are classic bull traps. A team hypes up their project, gets everyone excited, and then
Boom, they vanish with the money.
gone, just like that. And investors are left with worthless tokens.
It's a reminder that you got to really understand what you're investing in.
Due diligence is key. Research the team, the technology, the white paper. Don't just buy into the hype.
So it seems like avoiding bull traps comes down to two things: critical thinking and emotional control.
Absolutely. Don't let your emotions, especially fear and greed, cloud your judgment.
Because when you're making decisions based on emotion, you're more likely to fall for these traps.
You become an easy target.
Okay, let's say you're looking at a chart, trying to figure out if a price surge is the real deal or a trap. What are some red flags?
The source material mentions a few key things to watch out for. First, sudden, unexplained price spikes.
Like a stock price goes vertical for no apparent reason.
Right. If there's no news or fundamental change to justify it, be wary.
That makes sense. What else?
Keep an eye on the trading volume. If the price is going up but the volume is low, that's suspicious.
It's like a party with no guests. Something's not right.
Exactly. It could be a sign of artificial pumping.
Okay, high price, low volume, red flag number 2. Anything else?
Watch for selling pressure. If a lot of people start selling right after a price spike, that's a bad sign.
Like the smart money is getting out before the trap closes.
Exactly. They're seeing the writing on the wall.
Speaking of writing on the wall, this source also mentioned resistance levels. What are those?
Basically, there are price points where a stock has historically struggled to break through.
So if a stock keeps hitting that ceiling, even with upward momentum, it could be a sign of weakness.
Right. It suggests that there isn't enough genuine buying interest to push it past that level.
Okay, let's say you're already caught in a bull trap. What do? Panic.
Definitely not. Panicking usually leads to bad decisions.
So take a deep breath, assess the situation.
Exactly. Our source recommends using stop-loss orders.
Stop-loss orders. Remind me how those work again.
It's an order you place with your broker to automatically sell a stock if it drops below a certain price.
So it limits your losses, even if you're not watching the market every second.
Exactly. It's a way to protect your capital from further losses.
How do you decide on the stop-loss price, though?
It depends on your risk tolerance and the specific stock. You need to find a balance between giving it room to move and cutting your losses.
Technical analysis can help with that, right?
Definitely. Looking at charts, support levels, and other indicators can give you a better idea of where to set your stop loss.
So even if you get caught in a trap, you can still minimize the damage.
Exactly. And more importantly, you can learn from the experience.
That's what the source emphasizes, right? Turning losses into learning opportunities.
Absolutely. Don't dwell on the mistake. Analyze what happened and adjust your strategy for next time.
Okay, last question. How can you avoid bull traps altogether?
Well, knowledge is your best defense.
Research, research, research.
Exactly. Understand the fundamentals of the company, the industry, the market. Don't just chase hype.
And stay informed, right? Keep up with the news, the trends, the latest development.
Absolutely. The more you know, the less likely you are to be fooled by these traps.
So it's a combination of research, critical thinking, and emotional discipline.
You got it. Investing is a marathon, not a sprint. Don't let FOMO or greed lead you astray.
Stay focused on your goals, manage your risk, and keep learning.
Couldn't have said it better myself.
So we've learned about bull traps, how they work, how to spot them, and how to avoid them. But here's something to think about. What other market manipulation tactics are out there?
That's a good question. There's a whole world of tricks and schemes out there.
So how do you become a master of spotting these manipulations and staying one step ahead?
Keep learning, keep questioning, and never stop sharpening your investing skills. The market is constantly evolving, so you need to evolve with it.
Great advice. Thanks for diving deep with me today.
Anytime. Always happy to talk about the market, especially when it comes to protecting investors from these traps.
Stay tuned, everyone. We'll be back soon with another deep dive.
And remember, knowledge is power. The more you know, the better equipped you'll be to navigate the exciting and sometimes treacherous world of investing.
See you next time.
Bye.